And our next speaker is Alexis Kokkinos on the topic of what is to come, other issues. There's a lot to come, isn't there? We've heard across every one of our speakers, really. No certainty, there's a lot to come. Alexis is a partner in the tax consulting division of Pitcher Partners, very experienced in providing tax advice to a range of corporate clients. He's a member of the Board of Taxation Advisory Panel, heavily involved with consultation with the ATO, Federal Treasury, consolidation as well, and sits on a number of ATO liaison groups. So, Alexis, what's to come?
Thanks, Tony. This session, I'm going to go through a number of issues that are going to come out in the near future. And it's interesting, when I went to put this presentation together, I went through a stock take of my issues that I had outstanding, being announcements and other issues being raised. I come up with a list of about 32 to 35 items that probably haven't been enacted as of yet or dealt with by the government or Treasury. So there's quite a lot that's, I think, still to come. Now, I obviously can't touch on all those during this session, but it is interesting in the climate at the moment. We've focused on the RTFI and the residual cost-setting rules, and they go retrospectively back, but there's also a lot of other changes that will go retrospectively back. And the comment made by Steph in terms of having to map out all these other changes, I think is critically important, because you're likely to have to revisit your tax cost setting and your other amendments in the not too distant future under these other announcements if they impact on you. So it's worth knowing exactly what else might be coming your way. And so going through what's probably coming, I've tried to simplify it and set them into two categories. I think there's the first category, which I'd call the tweaking category, or the review and maintenance category, and the second category is probably the re-engineering or the major structural changes. Now, around the review and maintenance, we've probably got a number of announced yet unenacted measures, and I'll touch on a few of those. And we've got a lot of issues that are sitting at NTLG that haven't yet been addressed by Treasury. They've been raised with Treasury. So I might touch on a few of those. In respect of the future, though, probably the biggest things that are going to come out of those issues being addressed by the Board of Taxation, and there's quite a number of issues that are sitting in that report where the Board might come up with some major structural changes to consolidation going forward. Now, hopefully they will be go-forward positions, but we've probably seen with the TOFA announcement that just came out with consolidation, that's a retrospective amendment. So potentially there could be aspects in that may not apply prospectively. And finally, there's some other issues. We've had some recent cases, and there's some questions there as to whether those items are going to result in legislative change as well. So to begin with, in terms of the announced unenacted measures, I'm going to touch on about 13 items here very, very quickly. A lot of these occur retrospectively. One of the key questions I'd have is that, given the mess we are in with retrospective legislation, it'll be good to see whether the government is going to still go back with retrospective legislation on some of these amendments, or whether some of these may change to prospective. Now, the first one is Attachment B that came out with the rights to future income residual cost setting rules. Now, a lot of people focus on Attachment A and haven't probably gone to Attachment B, and Attachment B is pretty critical if you're your client or if you're in TOFA. And there's three amendments there. The first amendment's about TOFA liabilities where you've made an election, and that probably won't impact as many taxpayers as the other amendments, because it relies on you making a fair value forex or a financial reports election. But those amendments, they state to clarify that you acquire, essentially assume liabilities for their accounting value, and that's the value used going forward. Now, probably, though, one of the more controversial amendments is the second one, where that principle is then going to be extended to all TOFA liabilities. So the accounting value then becomes a starting value irrespective of whether you made an election or not. Now, on a principle basis, that may be okay going forward, but that's still up to debate, and that's up to the consultation process. However, on a retrospective basis, that's clearly questionable. So whether it's meeting current policy or whether it's going to change policy, I think that there's probably a clear change of policy there retrospectively that impacts a lot of taxpayers.